Welcome to FinTech Founders, the podcast where we sit down and speak with the entrepreneurs changing the financial industry. In each episode, you'll learn about a founder, the company they built, and their vision for the future. My name's Nicholas Beliveau, your host for the show and the head of marketing at FinTech Cadence. FinTech Cadence is a community builder that's developing Canada's FinTech leaders of tomorrow. To learn more about what we do, visit fintechcadence.com. Hello, everyone. Welcome to today's episode. Today, I have the pleasure to have for the first time on the show and meet for the first time Mr. David Fry, founder and CEO of Paays. How's it going?
Good morning. Yeah, great. Thanks. Thanks for having me.
Yeah, thank you. So it's pretty funny. We just connected yesterday over email, and you were coming into town. So I figured, why not meet for the first time over a podcast?
You're a persuasive guy.
So to kick things off, why don't you start telling us a bit about your company?
Yeah, so our company's called Paays. That's the short version. Long version, Paays Financial Technologies. We're a fintech company focused on solving for accessibility and affordability in travel. So the short tagline is travel now, pay later. And we're focused on travelers who are really have a strong desire to travel more, who've got the ability to pay but may not have the ability to pay now upfront, and giving them payment options that enable that accessibility and affordability to achieve that travel objective.
So essentially, it's a travel loan.
You could say that, yeah. I think that, really, we look at the way that we're focused on it. We're really looking at somebody who's going through a travel purchase journey, and this has really changed over the last 20 years, the way people do this, and then putting something in front of them that really sort of gets them to think about and sort of change the way they think about that accessibility. So it's not sort of like your typical at the very end of a purchase flow and sitting at checkout, because people purchase travel in a really different way. It's almost like now the last place they go is actually the booking point. And instead of like that whole journey really starts with this big inspiration phase, right? And a lot of that is the biggest travel magazine on the planet called Instagram. And so if you think of 1 billion people on Instagram, half of them at any given time are doing something travel related. They're liking, they're sharing, they're posting, they're looking at influencer content, they're looking at a lot of visual, and they're thinking about where they might want to go next. They haven't even typed into a search engine yet, and there appears a cool ad from Paays, a video. You could be here jumping off these cliffs in Mexico. You could be hiking Machu Picchu. You could be sitting on a beach in Bali for as low as $109 a month.
Okay, so it's more of a marketing play itself as a company to really be niche, because essentially a traveler, if they didn't hear of you, didn't have the funds immediately, they could go to a traditional lender and get a credit line to be able to do their travels, correct?
Yeah, so I think that's a key point too, is that we're not looking for people that are searching for financing and typing into Google, how do I finance my holiday, travel loan, et cetera, et cetera. This is really kind of the enablement. So the objective, it's sort of like when people buy a house, they have to get a mortgage, but I don't really want a mortgage. I want a house.
Right.
Our customer wants to travel, right? So if you think of our what we're doing on acquisition and digital channels, and you can program these now almost to pretty fine points. We're looking for travelers. We're looking for people that value travel, that want to travel more, and see what we can offer them, which is a payment option essentially, and spread that over a number of months to enable them to fulfill those objectives.
Sure. And you guys launched here in Canada to begin?
Yeah. So we I guess we officially incorporated the company about 2 years ago now. And we were talking earlier, and I was talking about vision, and maybe we'll get into that more. But I'd say the vision has been pretty consistent since then, and we talked a little bit about that up front. But the pathway to get there has changed quite a bit as we've learned. So we're now operating in 4 provinces: BC, Alberta, Manitoba, and Ontario. We have plans to be live in the rest of Canada this year. And I'm here in Montreal for most of this month, doing an integration with a new lending partner, which is going to really increase the scale of what we're doing quite dramatically.
Okay, neat. And I'm asking if you're here in Canada, because myself, I love traveling.
Mm-hmm.
And the last winter I spent 6 months in India.
Nice.
And through that, one, I discovered an entrepreneur trying to launch a similar idea, because especially in countries, less fortunate countries like India, there's a lot of people who want to travel but don't have the funds to do so. So who's more of your because you're saying it's people who want to travel, which is mostly everyone. Who's like the key person you're focusing on? Is it going to be local markets or more on the international markets?
Yeah, so let me address the second part of that first, because that's an easy one. So the constraint on what we can do is down to lending, right? And the lending rules, and lenders in Canada lend to Canadians, and lenders in the US lend to Americans, and so on and so forth. So right now we're set up to lend to Canadians. They're wherever they travel doesn't matter to us, as long as they're based in Canada. We can provide something to them. In terms of the type of customer, really, as you suggest, that travel is a big thing for a pretty wide range of demographic. I think what we're seeing though in the travel space is that by the end of next year, 50% of $1 trillion of total addressable market globally will be millennials. And so then you start thinking about millennials and their purchase journeys and their habits. Millennials have grown up with monthly payments. It starts with the smartphone, then it's Netflix and Spotify and gym membership, and eventually parents kick them out of the house and they've got to pay rent. So monthly payments really is something that's a real part of their lives.
So you're going to have vacation as a service.
You got it. Yeah, no, I'm not kidding, right? So essentially then, so that's a monthly payment. And then if you look at that same millennial, and it skews a bit towards women, like from what we see, it's probably, 55, 45. So if you ask her, what does she want to do with her disposable income? And she's not buying a car. She doesn't necessarily need to buy a condo. She wants to travel and experience, number one, right? And so take a monthly payment, attach it to the thing that she wants to do most with her disposable income, and then deliver it on a pretty smooth UX, mobile first app, etc., and price it right. Well, for us, price it right means we can give you that as low as 0%. And that sounds pretty good.
Wow. So, but how do you then?
How do you do that?
How do you
Magic,
do that?
Right? I guess that's why I'm a finance guy. So think of so travel, like many other sort of e-commerce businesses, has a lot of affiliate networks. And what affiliates do essentially is they acquire eyeballs and then they send them somewhere to get a commission. A good example of that is Rakuten, which used to be called Ebates. It's probably one of the world's largest affiliate platforms,
Sure.
right? And so you could go and shop directly at Saks or Adidas or Steve Madden. But why would you go to Ebates first? Well, because they're going to offer you something, right? They're a big e-commerce aggregator with all these different stores, but really you're going there to get cash back. And that works on an affiliate marketing model. Essentially, that's what we're doing as well. So we're building a marketplace of travel merchants who are going to pay us for those eyeballs or that purchase. And we're going to take the bulk of that commission, actually give it back to you, the customer, in the form of an interest rate buy down as low as 0%.
That's a really interesting model.
Yeah.
So
pretty unique, I would say.
Yeah. How did you get into deciding to launch a fintech startup in the travel space? Where you just wake up one morning and say, I want to travel, I don't have the funds for it, I'm going to build a solution for myself?
I'd say the first thing personally is that I travel a lot, and I've had the ability or the fortune, I guess, to be able to work around the world in different locations. And when I was in those locations, I got to travel a lot as well. So I think that's always been a part of my life. And then when I've had children, I've instilled that in them. And we're quite an active, sporty family, but kind of the main two sports that we're involved in, you travel with them as well, skiing and golf. And so we love to do both of those things. And basically, as I've always said to the kids, those things can take you around the world. So travel for sure. I think from a business perspective, I've been in banking and finance and capital markets for just close to 2 decades, London, New York, Toronto, Montreal. And this is now my third startup, and lots of lessons learned that, it's probably longer than this podcast. I can tell you about the first two. But first one was an exit. Didn't get to retire on that one. Second one, it was tough. And, we had a lot of good things happen, but in the end, it was a painful experience. And those lessons and the relationships, the experience and the know-how kind of brought me to starting to think about this tool called point of sale financing, and this is like kind of decades old, right? Where Sears used to have the in-store kind of financing on the washer and dryer. Leon's the brick, Bad Boy, and in Quebec it's Broye Martineau or Dufresne or something. And actually Sears was the first to do a travel financing as well way back when. Yeah, so it was a long time ago.
Okay.
And so an advisor of mine and I started looking at this, and we could see this kind of happening, and with companies like Klarna globally, Affirm in the US.
That's what I was going to mention. Exactly.
And then, we saw kind of a couple of examples of things going on with furniture here. But there's something about travel really that really got our interest. And I think it's, again, my personal aptitude to travel. I think it's the TAM, the total addressable market, is so big. It's all digital already. There's a lot of direct, what's the right word? Direct decisioning that the customer does, so meaning that the customer is already their own travel agent now for essentially 90% of people. There are people still going to travel agents whose average age is probably 62. But for people underneath that, generally it's all online. They're putting their own things together. And I think that was really interesting too then. So how do we bring this old school tool called point of sale lending, which has some really good benefits of increasing accessibility and affordability? Don't forget, with cars, a long time ago, the only people that could afford cars were people that could pay for them upfront now, right? Big number. So really only the wealthy could afford cars. And then somebody came up with a concept of monthly payments and eventually leasing, et cetera, to the point now where in the US last year, something like 88% of new vehicle purchases were either financed or leased. So, and for some, that's the way you shop for a car. What's the monthly payment? What's the monthly payment? So I think that there's a real opportunity then to kind of bring this old school financing tool to a very passionate, big vertical called travel, and really kind of have that same level of enablement and sort of change the way that people think about this. And really then back to sort of travel as a service, I guess, in a monthly payment.
Yeah. And now I'm curious, because you mentioned your first and second startup. What were they about? Were they in the finance space as well?
Yeah. So my first one, so I was running Deutsche Bank's global markets business in Canada through the crisis. And that was pretty much a front row seat to the end of the world for a couple of years. And at the end of that, you could sort of see the regulators who probably had under-regulated up till then were now going to go the other way and essentially over-regulate and turn the banks into utilities. And for an entrepreneur like me, so somebody who's kind of gone around to different locations and built new businesses, and that wasn't going to be kind of where I wanted to be. So I started a credit hedge fund. So I got into the asset management business, teamed up with a former colleague of mine from TD London. We started a credit hedge fund. We got backing from a big Canadian mutual fund company, and went from there. And sort of 3 years into that, a couple of changes with the mutual fund company, and my desire to do something new and start a fintech company. I exited there and I started a fintech company, 2015. And I guess at that time, the word fintech was kind of entering the lexicon. Sure. There's companies that were, kind of created long before that who probably will say that, well, we're a fintech company, right? You could say Bloomberg was really kind of probably one of the original fintech companies,
Absolutely.
right? Financial market data, Market was another one. But so that company was focused on a growing area of fintech called marketplace lending. So companies like Lending Club, Prosper, Borrowell in Canada, a few others, and a partner and I built a pretty complex, reasonably complicated data and analytics platform for asset managers, hedge funds, and big mutual funds in the U.S. like BlackRock or PIMCO or others to look at these loans. So essentially millions of rows of data and lots of attributes and building models around that. And yeah, that was going well until Lending Club had a big episode in May of 2016. And the industry really kind of ostensibly shut down for 6 months. And for a startup with a team of 12 people, 9 engineers, all of whom are on contract, and as soon as you don't renew that first contract, things are pretty difficult. So we managed a little bit longer, but it was a painful thing in the end because the business really never kind of recovered. And but from that, from I guess from bad things sometimes come good things, and the shoots out of that were the relationships that I built, an understanding of point of sale lending, having looked at really too much data to really understand it, and then thinking of kind of the new model for that, and where a vertical that might make a lot of sense for that kind of tool travel.
Okay. So what does your team look like today?
Yeah, so we're pretty small. We're 5 people. There's myself and my CTO, who sort of splits his time. He's Indian, and I've got him on a global talent stream visa. The folks at Mars, the plug for them, were really helpful on that. So he splits his time between his home in Bangalore and Toronto. And then we have 3 other engineers essentially underneath them. So someone doing DevOps, front end, back end. And yeah, I think we're getting pretty close to where we're going to do a seed round and hopefully hire a few more bodies, because yours truly is doing a lot of different things right now that I'm sure there are people better than me that could do, kind of thing.
So what are some of these lessons? You said you learned a lot. You went through quite of a professional roller coaster with the financial downturn, with building 2 startups, 1 exit. So I'm guessing a positive note for you. The later, maybe less so. What are some of the key takeaways you have that you could share with other founders that are maybe launching their first startup?
Yeah, so I guess the first thing is that things don't happen the way you think they will. So, and 2, things take a lot longer than you think they will. So if you kind of sort of take those 2 things for granted, and you need to apply those then to not only your the business that you're creating, but to your personal life, right? Because the 2 of those go together, right? As a founder, because you are jumping into a space where there's a lot of uncertainty, and if you've not planned for that with your family and your financial shape, then you may run out of money before your company does, kind of thing. And generally those 2 things actually get pretty tied together. So it's a big commitment that you need to make to jump into that, because things are going to take longer than you think. So I think that's one. I think the concept of MVP is really important too. So for me, coming out of a corporate environment for 20 years, where everything you put in front of a customer had to be perfect. Every I dotted, T crossed, every font size, the right color in that PowerPoint presentation. That's the death of startups, right? So don't let the perfect be the enemy of the good, right? So really thinking in terms of, how do we create something that's going to give pretty quick validation at the lowest cost? It's easy to say, it's hard to do, but that's the way you need to think of when you're starting something, is think of like that huge, hairy problem. How do you boil that down to something much more concise and simple that you can solve? And then you can gradually expand the set of those problems that you're solving. But don't look at this as one big problem that is going to take a really long time and a very complex build. What's the company on Silicon Valley? Pied Piper, right?
Mm-hmm.
So that's a good example of that, right? Like, we're going to build for 5 years and we don't even know who's going to use it. We don't care what problem we're solving. It doesn't matter. It's just cool technology, right? The reality is that most of what works is the opposite of that, right? So it's trial and fail, try and fail, iterate, and gradually you'll figure out, what that problem is to solve, and eventually you may get those 3 magic words called product market fit.
But what's so important is trying to get in front of the customers as soon as possible, because so many times people just try to build the coolest tech possible without thinking about who really is the end consumer who's going to pay for what you're building. And
yeah, I think, and whether that's B2C or B2B, I think that, and I've done both now, because my last one was B2B, and we didn't intend, we were in a very fast growing market until it wasn't. And that cut down on the sales cycles, the enterprise sales cycles. As soon as that market turned, you could see the reversion to massive long sales cycles, like that were measured in almost years, right? And if you think like you're a startup and you're going to go into a place where sales, it's just a killer. So there's the understanding of that too, really. And then you're right that the quicker you get some validation, iteration, user feedback. I had some great advice, and when I started this one, so this is really my first B2C, And it was actually our designer who said, you should just go to Starbucks. I said, well, we're on Queen West, so there's better coffee than Starbucks. No, not to get the coffee, but to sit there and just go buy a stack of gift cards for like $10 each or something, right? And get like 20 of them, and then just ask people like, hey, do you have like 10 minutes or 15 minutes? Can you kind of look at this and walk through this flow and give me some feedback, et cetera? Or go someplace where you think your customer, like that's kind of who my customer would be. Well, it turns out we were at WeWork, and so I kind of didn't even need to go to Starbucks. So I just sort of put something up on the internal chat, and we had a bunch of people that said they'd be happy to help. And so those are easy things. Those are easy wins to get, essentially, where you're going to get someone to use your product. And an example of it is that if you spent a lot of time sort of designing the experience by looking at a desktop flow and that 13.1 inches or whatever that is, and then you see somebody actually test it using a mobile, you're going to see things that you've never seen before. And
it could be scary. You almost see, you're like, oh, no, don't touch that.
Yeah, exactly. And I think that's an example of just a lot of different things that you can see when people are using it, because you have all these assumptions, and the reality is that you probably know about 20% of it, right?
So you've been in the space, in the financial sector, as you're saying, for almost 2 decades. Now you've had the experience of 3 companies. What are some of what's your vision for the future of the financial industry? Is it headed in the right direction? Is there any big lack that you see that there needs technological change to bring about?
Yeah, I'd say I'm really excited about the next 5 to 10 to 20 years of what's going to happen in financial services now. I think somewhere along the way, I drank the Kool-Aid. So fintech definitely is, it's oozing out of me. And I think there's so much opportunity now for financial technology to improve the lives of consumers and businesses like never before, right? So that's a platitude, but specifically, I think that open banking and the potential of what that can mean with data enablement, freedom, transparency, better understanding, and then creating incentive and rewards around that is a huge opportunity. I think financial services in general probably moves away from all these different sort of product silos. And when I was in banking, boy, those silos were pretty rigid. I think what we're seeing then is a shift, and this is kind of what happened in the travel business like 20 years ago, where where it was very merchant focused, and then with the technology became very consumer centric, right? So the customer becomes the center. You've put the power in their hands to basically create infinite choice, transparency, configurability. And I think that's a good parallel for kind of where maybe it's, at the beginning of where the travel business was like 20 years ago. And you see then the ability to empower that customer then with all of those things that technology can bring. And I think then that has impact on how it changes the business models for companies in the space, right? And so, and you think of like a good example of that is the partnership that Google and Citi announced in the U.S.
In Toronto. Oh, okay.
In the U.S. So Google, instead of Google becoming a bank or wanting to get a banking license, well, why does Google need to do that when they can just partner with Citibank, who become an infrastructure layer for them? And Google, as we know, is pretty good at user interface, pretty good at understanding what the user wants. They've got your Gmail address, and who has better AI than Google? Nobody.
So you mentioned open banking.
Mm-hmm.
That's going to be a big theme for 2020, and hopefully it comes about sooner rather than later. Could you explain how it'd impact your business? Because I'm sure it'd have a pretty positive upturn.
Yeah, so I think we're using a tool. So we can talk quickly, I guess, about the Plaid visa thing that happened this week. So yeah. Wow, big news.
Well, when this comes out, maybe weeks ago, but
oh yeah, sorry. Okay, so we use one of their competitors, a Canadian one, and we use that.
You're with Flinks?
With Flinks, okay. Yeah, and so we're using that for an authentication tool.
Sure.
There's further ability, obviously, there to look at transactions and sort of better understand a customer. And I think, longer term that we see that there is potential for that. I think, when I think one of your more recent podcasts with Phil from Milo,
Yeah.
I think they have a really direct kind of use case on that, like right now, right? Where you can actually understand someone's purchasing and saving behavior and then create kind of reward systems for them to potentially, do the right thing. But I think that for, me as a former credit person, I think what's really interesting too is that I think the next generation of credit models, they actually get built on this data, right? So I think if you think of what credit, like a TransUnion or Equifax and those scores, they're very backward looking. So it's kind of what you've done in the past, and it has a lot of weighting on that. And I think that's good in a sense because it's a history, different and not necessarily better. But if you combine this, are the transactions in your account for the last 12 months?
Well, now if open, it make it living. You're
It's current, right? So I know exactly. I can better understand your life, and so in that instance, then that should give me a lot better power to understand you, and theoretically, then it should mean that I'm more willing to lend to you, which then gets priced into lower interest rates for consumers, right? So there needs to be a give and take on that, right? So if I'm a consumer and I'm going to get the ability to share my data, permission-based access through the right security and technology, et cetera, then the quid pro quo is then you're going to give me something better. You're going to give me a better savings rate. You're going to give me a better loan rate. You're going to give me better asset management products, et cetera, et cetera. And I think that the technology is there now, right? And we've seen it kind of get going with PSD2 in Europe. The Americans are kind of taking almost a bank by bank approach to it. So there's nothing kind of, I think, imminent legislatively. Canada, obviously, we've got an oligopoly of banks, and change happens relatively slowly. But I think it's the consumer now, really, that's sort of leading the charge. And I think that what I said earlier about we're going to get away from these sort of product silos and move towards the consumer-centric business model. I think that's all going to drive this, like eventually. And eventually is not going to be very long from what I can see.
Mm-hmm. It's going to be interesting to see how it plays out.
Absolutely.
But that's all the time we have for today. But thank you so much for meeting. And see, it was a great chat. First time's a charm. Thank you so much for being on the show.
Great. Yeah, it was great to be here. Thank you.
And thank you all for listening. Take care.